In this short video, let's look at this concept about product mix decisions when there's something constraining you from making unlimited amounts of everything you want to make. So in this simple scenario, we've got a product that has a basic or regular version and then a large version or something special about it. And in this scenario, there's unlimited demand. So for whatever reason, our product is hugely successful. Everybody wants it. The problem is we can only make so many because we are somehow constrained. Either we don't have enough manpower, or we don't have the materials, or we don't have the warehouse space. That demand is outstripping our ability to supply. So this is a short-term issue, right? In the long term, we can expand our ability and won't have constraints. So this is a short-term decision. Somehow we're being constrained. So we want to put our efforts into making whichever product will make us the most money in total during this short phase of constraints. When I was learning this one caused me all kinds of trouble, but it's really a pretty simple idea because you live with it yourself. You are constrained by hours. There are only so many hours you can work. So let's say that two different companies wanted to hire you to do consulting and they both needed you the same day. Maybe it's this coming Saturday. You cannot be both places at one time. So you've got to pick which one. What is your constraint? Your constraint is time. So what will you do? You will probably select whichever one pays you the most per constraint. And if your constraint is hours, you're going to select the one that pays you the most per hour. Take that same idea. That's what we're going to use in this exercise. So the setup is there's this company, Storage Solutions. They make these big garbage bins. We have a large size and a regular size. Demand for the product is so high that we could sell every unit we produce. Unfortunately for us, the same machinery is needed to produce both sizes. And that machinery is only available for 3,000 hours during this period of time that we're looking at. So that's our constraint, is hours. The company can produce 10 large bins every hour compared to 15 of the regular one. Maybe the large one takes more machine time, so we can't make as many of those if we focus on those. If we focus on the regular ones, we could make 15 every hour. Fixed expenses amounted to 110. That won't affect our mix decision. That will only come later. Number one, which product should we focus on? We have unlimited demand. We got to pick which of those two products will make us the most money in total. So they've already set the exercise up for you pretty nicely because what matters is your contribution margin per constraint. So contribution margin is selling price minus variable cost. So they've got that set up nicely for each one. So for the regular bin, $8.10 minus $3.50. The contribution margin in total for that one is $4.60. So write that down. The contribution margin every time we make a large one, we sell it for $10.50. The variable cost to make it are $4.20. That one has a contribution margin of $6.30. So you might think, easy. I want to focus on the large ones. No. Because we have a constraint, we have to go one step further and look at what is the contribution margin per constraint. And our constraint is hours. So a couple different ways you can do this. I think intuitively the easiest one is just ask myself, if I focus on the large ones for 1 hour, how many of those can I make? Well, I can make 10 of them, and each one contributes $6.30. So multiply the large by 10, and I get $63 per hour. So the contribution margin per constraint, and my constraint is hours. If I focus on the large one, I'm going to make $63 of contribution margin every hour for 3,000 hours. That sounds fantastic, right? But maybe the regular is better. Let's see. The regular, every time I build a regular one, it contributes to me $4.60. But I can make 15 of those every hour. So I need to multiply the $4.60 times 15. And when I do that, you see it's $69 per hour. 69 is better than 63. We like to maximize our profits. So in this short run decision, we will focus on the regular one. All right, so what did we learn from this? When there's a constraint, you can't just stop at the contribution margin level. You then have to figure out what is the contribution margin per whatever's constraining you. And in this case, and in most of the exercises, it's going to be hours. So now that we know we want to emphasize regular, number 2 says to maximize profits, How many of each size bin would you produce? Well, we're only going to produce the regular one. How many can we produce in 3,000 hours? 3,000 hours, we make 15 of those an hour. We're going to make 45,000 of the regular bin and 0 of the large. Number 3 says, given this product mix, what will your operating income be? You can figure that out. Just do a contribution margin income statement. Sales minus variable cost is contribution margin. Then subtract out that 110 of fixed expenses they gave you right at the end of the exercise. That'll give you your operating income. So when you run into these on an exam in this class or any other class, you just want to use logic, try to relate it to your own life. You have a constraint. Your constraint is usually time, and you try to put your effort, your work time into the areas that pay you the most per hour.